My friends, I need you to stop whatever you're doing right now because what I'm about to share with you today could absolutely change the size of your Social Security check. And I mean that from the bottom of my heart. Whether you're on retirement benefits, SSDI, SSI, or you're a veteran receiving VA payments, there are four brand new rules that go into effect on April 1st, and most people have absolutely no idea they're coming. I've been getting messages from people all across the country. Folks just like Margaret from Ohio, who's 71 years old and living on a fixed income, and she told me she had no idea a change was coming that could affect her direct deposit. Or like James from Florida, a 68-year-old veteran who's been leaving money on the table for 2 years because nobody told him about a little-known credit he qualified for. Today, I'm going to make sure that doesn't happen to you. So pour yourself a cup of coffee, sit down with me for just a few minutes, and let's walk through every single one of these four new Social Security rules together, because knowledge is power, and when it comes to your retirement income, you deserve to have all the facts. Let's get into it. All right, the very first rule I want to talk about today is something that affects a lot of people who are collecting Social Security retirement benefits, but are still working or thinking about going back to work part-time. It's called the earnings test. And starting April 1st, the SSA has updated the thresholds for how much you can earn before they start reducing your benefit. Here's how it works in plain English. If you are under full retirement age and you're still working, Social Security will temporarily reduce your benefit if you earn more than a certain amount. In the past, that limit was around $22,320 per year. But starting this April, that threshold is getting adjusted upward, and that means you may be able to earn more money from a part-time job without losing any of your monthly benefit. Now, here's what I really want you to understand about this rule, because there's a piece most people don't know. Any benefits that were withheld because you earned too much, that money doesn't just disappear. Once you reach your full retirement age, the Social Security Administration actually recalculates your benefit and gives you credit for those withheld amounts. So it comes back to you. It's not gone forever, but right now, with this new threshold, you may not even have to worry about it at all. Think about someone like Dorothy, a 63-year-old retiree from Tennessee who took early Social Security at 62 but still works part-time at a garden center making about $1,100 a month. Under the old rule, she was right on the edge of having her benefits reduced. Under this new rule, she's comfortably under the threshold. That's real money staying in her pocket every single month. This second rule is one that I have talked about for months, and I am so glad it is finally here. If you are a public sector retiree, a teacher, a firefighter, a police officer, a government worker, or if you are the spouse or widow of someone who worked in the public sector, then this rule is going to feel like a breath of fresh air. For decades, two provisions in Social Security law, called the Windfall Elimination Provision and the Government Pension Offset, were reducing or completely eliminating Social Security benefits for millions of public employees. Some retired teachers were losing $400, $500, even $600 a month because of these two rules. Widows of government workers were sometimes seeing their survivor benefits reduced to zero. It was devastating, and frankly, it was deeply unfair. Well, thanks to the Social Security Fairness Act, which was signed into law earlier this year, both WEP and GPO have been repealed. And starting with April payments, eligible beneficiaries will begin seeing those reductions reversed. The SSA has been processing these changes, and starting April 1st, the adjustments are supposed to be fully reflected in monthly payment amounts. Now, here's the important part you need to pay attention to. If you believe you were affected by WEP or GPO, you may also be entitled to back payments going back to January of this year. The SSA is supposed to be reaching out to affected beneficiaries, but my strong advice to you is do not wait for them to contact you. Call the Social Security Administration directly at 1-800-772-1213 or log into your My Social Security account online at ssa.gov and verify that your new benefit amount has been correctly calculated. Do not assume everything has been fixed automatically. Check it yourself. For many retired teachers and their families, we're talking about hundreds of dollars per month coming back into their checks. I've heard from people who are going to see their monthly benefit increase by $450, $500, even over $600 a month. That is life-changing money for someone on a fixed income. Okay, rule number 3 is one that might seem simple on the surface, but I promise you it matters, especially if you budget your household expenses around your Social Security payment date. Starting in April, there are some adjustments to how the SSA schedules and processes direct deposit payments, and I want to make sure you don't get caught off guard. As most of you know, Social Security payment dates are based on your birthday. If your birthday falls between the 1st and 10th of the month, you get paid on the second Wednesday. If your birthday is between the 11th and 20th, you're paid on the third Wednesday. And if your birthday is between the 21st and 31st, your payment comes on the fourth Wednesday. Supplemental Security Income, SSI, is typically paid on the first of each month. Now, here's what's new. Due to processing system upgrades at the Social Security Administration, part of their broader modernization effort, there may be slight delays or date shifts for certain beneficiaries receiving payments through older financial institutions or paper check recipients. The SSA is urging everyone who is still receiving paper checks to switch to direct deposit if at all possible, because paper check processing is going to be slower starting this spring. And here's something I want every single one of you to bookmark in your mind. If your payment doesn't arrive on its scheduled date, do not panic and do not call the SSA right away. They actually ask you to wait 3 business days before calling because sometimes deposits are just processing. But if it's been more than 3 business days and your money is still not there, then absolutely pick up that phone. Also, for anyone receiving SSI, and this is especially important, if the first of the month falls on a weekend or a federal holiday, your payment will come early on the last business day of the prior month. So sometimes in April, your SSI payment might actually show up in late March. Don't be confused by that. That's your April payment arriving early, not a bonus. Now, I have to be honest with you about rule number 4, because this one has caused some real concern in the community, and I want to give you the full picture. Not just the scary headlines, but what it actually means for your day-to-day life. Starting in April, the Social Security Administration is implementing stronger identity verification requirements for certain transactions and account changes. This is part of a broader effort to crack down on fraud, which costs the Social Security system billions of dollars every year. Fraudsters have been calling seniors, impersonating SSA employees, and attempting to change direct deposit information to steal benefits. These new rules are designed to protect you. So what does this actually mean? For most current beneficiaries who are not making any changes to their account, no change of address, no banking change, no name change, you will not notice anything different. Your payments will continue to come just as they always have. However, if you do need to make a change to your Social Security account, you may now be required to verify your identity either through an upgraded online process at ssa.gov or in some cases in person at your local Social Security office. Now, I know that for some of you, especially those who have mobility challenges or who live far from a Social Security office, the idea of an in-person visit sounds stressful. Here's what I want you to know. First, you can always call the SSA and ask if your particular change can be handled over the phone or online. Second, many changes can still be processed without going in person. Third, if you do need to visit an office, you can call ahead and schedule an appointment so you're not sitting in a waiting room for hours. And please, 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 I cannot say this enough. If you ever get a phone call from someone claiming to be from Social Security and asking you to confirm your bank account number, your Social Security number, or any personal information over the phone, hang up. The real Social Security Administration will never call you out of the blue and demand personal information. That is a scam every single time. Now that we've walked through all 4 rules, I want to spend a few minutes talking about smart strategies you can use right now to make sure you're getting every single dollar you're entitled to. Because here's something I know for certain. Millions of seniors across America are leaving money on the table every year simply because they don't know what they qualify for. First, if you haven't already, set up your My Social Security account at ssa.gov. This is free, it's secure, and it lets you see your full earnings history, your estimated benefit amount, and your payment dates all in one place. It's also the fastest way to spot if something is wrong with your benefit calculation. Second, if you are 62 or older and you haven't claimed Social Security yet, please take the time to model out different claiming ages before you make that decision. Claiming at 62 gives you money sooner, but your monthly check will be permanently reduced, sometimes by as much as 30%. Every year you wait past your full retirement age up to age 70 increases your benefit by about 8%. That adds up to thousands of dollars over a lifetime. Third, if you are a veteran receiving VA benefits in addition to Social Security, make sure you understand how these 2 benefit streams interact. VA disability compensation is not taxable and does not affect your Social Security benefit. But depending on your total income, your Social Security benefit may be subject to federal income tax. Up to 85% of your benefit can be taxable if your combined income is above certain thresholds. A tax professional or a benefits counselor can help you plan around this. And fourth, this is especially important for anyone who was affected by WEP or GPO. Make sure you are checking your new benefit amount in writing. Don't just assume the SSA got it right. Request a benefit verification letter, compare it to what you were receiving before, and if the numbers don't add up, file an appeal. You have every right to do that. My friends, I want to close today by saying something that I mean with every fiber of my being. You worked hard your entire life. You paid into this system. You raised families, built communities, and contributed to this country in ways that can never be fully measured. You deserve every single dollar of these benefits, and then some. These 4 new Social Security rules starting April 1st are significant changes. And the fact that you're here today watching this video tells me you're the kind of person who takes their financial future seriously. That matters. Stay informed, stay engaged, and never be afraid to ask questions. If you found this video helpful, please share it with someone you love, a parent, a neighbor, a friend who might be affected by these changes. And if you have questions about your specific situation, drop them in the comments below, and I will do my very best to answer them. Take good care of yourselves, God bless, and I'll see you in the next video.